Well, good day, smart traders. I trust each and every one of you are ready for another profitable day within the market. Let's kick things off by having a look at today's economic calendar.
This week has an exciting economic calendar, filled with crucial events that will shape the global landscape. We have a lot to cover, from inflation data influencing interest rate expectations to the European Central Bank's annual forum in Portugal. Plus, we can't ignore the economic developments in China and the ongoing events in Russia, challenging President Vladimir Putin's grip on power. But first, let's dive into the heart of the matter. On Friday, we'll receive the eagerly anticipated May data on the Personal Consumption Expenditure Price Index, the Federal Reserve's preferred inflation gauge. This release will provide traders with valuable insight into the future path of interest rates. Simultaneously, the Eurozone will unveil its preliminary inflation data for June, where the headline rate is expected to moderate while underlying inflation is projected to tick higher. These numbers will present a significant challenge for the European Central Bank. Additionally, make sure to stick around until the end as we have some thrilling technical analysis on foreign currencies, indices, and commodities to share.
Let's move on by having a look at what's making headlines within the financial markets today.
In currency news, the dollar has gained strength against the euro due to disappointing business activity data worldwide and hawkish comments from the central banks. The latest survey data reveals a 3-month low in US business activity, raising concerns about the manufacturing sector and service growth. Despite these challenges, the overall picture indicates a slight uptick in US economic growth during the second quarter. However, worries persist about the impact of the Federal Reserve's aggressive interest rate increases and the possibilities of a recession. Shifting gears to digital currencies, Bitcoin has had a remarkable week, and experts predict that it may be heading towards one of its best years. The emergence of proposed exchange-traded funds has sparked optimism and increased trading activity. Notably, BlackRock Inc.'s unexpected submission of a Bitcoin ETF application has boosted confidence in the market. Let's move on to Wall Street, where stock markets closed the week in the red. It's been a challenging week for US stocks, and concerns about the central bank's policy weighed on investor sentiment. The broader market rally that we've witnessed in recent months seemed to be losing some ground, leading to a weaker performance. The Federal Reserve's official comments have contributed to worries about the potential for higher interest rates in the future. Now let's turn our attention to commodities. WTI crude oil settled lower on Friday, facing pressure from a bigger than expected Bank of England rate hike and concerns about the economy outlook on fuel demand. Both WTI and Brent crude have experienced a volatile month, with fluctuations impacting their performance. Lastly, let's discuss the gold market. Despite an imperfect macro picture, the gold bull is still fighting to hold its ground. Earlier in the week, gold faced downward pressure as the US dollar rebounded following the Bank of England's surprising interest rate hike. The rate increase, twice as much as forecasted, was implemented to address significant indicators of prolonged British inflation. As the Bank of England joins the Federal Reserve in raising rates, the macro environment for gold becomes increasingly challenging. Now let's dive into the highly anticipated technical analysis for the day. Keep in mind that these technical analysis scenarios are subject to market conditions and should be used in conjunction with other relevant indicators and analysis tools. As always, exercise caution and conduct thorough research before making any trading decisions. We'll begin with USD CAD, where the loonie is currently trading near a critical support level. A decisive break below 1.314, accompanied by a close below that level, could extend the decline further to around 1.305. On the other hand, if the support holds and we close above 1.323, it could trigger a potential correction towards 1.335. Shifting our focus to the Dow Jones, we observe that it is currently trapped within a falling wedge correction pattern. If the price manages to break above the upper boundary of the pattern around 33,900 and close above that level, it could reignite bullish momentum and propel the index higher towards the 34,200 mark. Turning our attention to crude oil, WTI is currently moving sideways within a consolidation pattern. To validate an upside breakout, we need to see a close above 70.1. If this level is convincingly surpassed, it may lead to further upside potential, with a potential target around 72.8. Finally, let's analyze the price action in the gold market. Gold has been trading within a descending channel, indicating a bearish bias. If the price respects the channel and we witness a close below the support level at 1922, it could trigger additional downside momentum, potentially pushing towards the lower end of the channel. However, a break above the channel, confirmed by a close above 1929, might signal a reversal and open up the possibility of a bullish move towards 1935.
So that is it from us here at Smart Online Trader. Should you be interested in any additional services that we offer, kindly get in touch with us or simply click on one of the links in the description below. As always, may the force be with you. Cheers.